Good evening. You're watching What Did You Miss on Bloomberg Quint Live. I'm Shraddha Babla and here are the headlines. The economic survey forecasts FY19 growth of between 7 to 7.5% does not rule out fiscal consolidation pause this year. The survey also highlights a 50% increase in indirect tax payers due to the rollout of the GST. The government also says the distribution of the GST tax base among states has allayed fears of revenue loss. And Indian markets resume their record run led by HDFC Twins, Maruti Suzuki and TCS. Mortgage lender HDFC's profit jumps threefold in the third quarter thanks to a one-time gain due to its stake sale in HDFC Standard Life Insurance. The board also approves a fundraising drive of up to $1.5 billion. And President Ramnath Kovind and Prime Minister Modi appealed to political parties to pass the Triple Talaq bill in Parliament. Modi calls on parties to rise above politics and deliver a New Year gift to Muslim women. Let's also head across to the management of Tech Mahindra as they address the media post reporting their December quarter numbers.
Our total headcount was around 115,000 professionals, and which increased by about 8.3% as compared to the previous year. Let me move while CP will talk about the details of our micro details of our each individual vertical. Let me talk a bit about what is happening in the global economy. Interestingly, IMF, which is normally a very conservative agency, said that the economy seems to be on its sweet spot. There was earlier a general element of pessimism, but it now seems that you may see a global uptick in terms of economic endeavor. Even the World Bank has forecasted that the economic growth could be as high as 3 to 4%, which is quite high by our previous standards. Interestingly, Trump's ascension and his subsequent reform of, some people would quarrel with the word reform, but his bringing down the income tax rates in US has unleashed considerable activity and, more importantly, optimism in the US economy, having implications globally. I am certain that these positive sentiments on the economic sides, both when it comes to Europe as also when it comes to the United States, will have its cascading effect in terms of significant and substantial growth in demand, which will therefore cascade to the IT industry in this country. Again, a very positive signal has been given by International Monetary Fund, which once again is a very conservative institution, giving a very bright global outlook. You can see this cascading already into India and in the Indian economy and what is happening to our stock market. So net, it seems that going forward, we are going to have a fairly buoyant global economy. It is for us now to see how we can capture the moment and give impetus to the technology industry and especially to our company. So conditions are hugely favorable at this point of time. I do believe that we are prepared to capture this opportunity, but I will leave it to my colleague here, CP, to give you the precise details and the architecture of how he's going to catch the moment. CP?
So good evening, everybody, and clearly one is delighted to be here and share with you that we have delivered yet another quarter of an all-round growth in revenue, better margins, better profits, and better cash flows. More important is, it is just not the improved performance. Important is that in 2017, we had laid the foundation of New Tech Mahindra. We had shared with you that your company will lay the foundation of a digital Tech Mahindra, will lay a foundation of a more diversified Tech Mahindra, will lay the foundation of not only a powerful IT software or a digital technologies company, but also we would have invested in engineering, we would have invested in creating a very different kind of a BPO, BPS practice. What I have seen during this quarter is that our strategy of innovation, our strategy of working together with our customers to create network of the future, create Industry 4.0 offerings, create a better platform for customer experience management, create platforms and use cases on blockchain, create different towers of service on cyber security. All of them are coming together with a common layer of analytics, common layer of artificial intelligence. So I think where you're seeing is clearly a pattern, and we have done it not alone. We have done it with some of our partners. For example, with Toshiba Digital Solutions, we have a smart factory framework. With AT&T and Linux Foundation, we created a platform called Acumos for artificial intelligence.
All right, so that's the management of Tech Mahindra talking about the third quarter numbers. Good numbers coming in from the IT. Major dollar revenue growth of 2.5%. EBIT margins have come in 170 basis points higher at 12.7% as compared to 11% in the earlier quarter. And that has driven the net profit growth of 12.8% at 943 crores. So that's the Tech Mahindra numbers. But moving on, the government expects India to clock a GDP growth rate between 7 and 7.5% in FY19, according to the economic survey tabled in Parliament today. The survey expects a pickup in exports and a rebound in private investment to propel growth in financial year 2019. Rising crude oil prices, however, remain a big threat to the government's fiscal status, and the survey does not rule out a pause in the government's consolidation drive given the general elections in 2019. The survey also attributed a 50% increase in indirect taxpayers to the rollout of the goods and services tax. As Chief Economic Advisor Arvind Subramaniam tabled the economic survey on the first day of the budget session, he listed out key factors responsible for the Indian economy decoupling from the rest of the world over the last few quarters. Here's what he had to say.
There was this competitiveness impact from the two major policy actions, demonetization and GST. And you can see that, I mean, this is not proof, but it's all suggestive evidence that for about 1 to 2 quarters, you can see highlighted in white how exports decelerated very sharply and imports accelerated very sharply. So that was kind of some evidence that there was an impact from the two policy actions. Then, of course, beginning in the early to middle of 2016, our interest rates went up very sharply. See how we decoupled from the rest of the world. So interest rates affected demand. In turn, capital came in, strengthened the exchange rate, as you can see on the right-hand side. That also affected our competitiveness. If you look at the trade balance and the services balance, they were affected by that, and that also had a dampening effect on real activity. And this was, again, different from the rest of the world. That's why we kind of decoupled from the rest of the world to some extent. The fourth factor, which I'll talk about later, is, of course, oil prices. Also this year, oil prices went up. That affected consumption and the government finances, and that also held back real economic activity. So these kind of four factors contributed to the decoupling. And immediately you can see, therefore, what happens going forward. We see now that there is a robust and broad-based revival. I mean, several indicators of activity. We've shown manufacturing growth, GVA growth, even investment, exports, net private transfers, credit. They've all started to pick up. I mean, the direction is very good. The level is still below potential, should keep that in mind. But in terms of directionally, the economy seems to be picking up quite nicely, quite robustly, and that's what's happening now.
A pause in the fiscal consolidation plan may not be a bad idea, says NITI Aayog Vice Chairman Rajiv Kumar. Speaking to Unikrishnan of Bloomberg News, he says that too much attention is being given to fiscal deficit number and that focus must shift to debt financing. Listen in.
It's not a bad idea, but I maintain that the economic survey is not a precursor to the budget. So the budget may still pleasantly surprise you by sticking to the path of fiscal, the glide path for fiscal consolidation. And I think the government has tried very hard to raise revenues and mobilize extra resources, including some more from the Reserve Bank, which had not obliged so far. And knowing the Prime Minister and the Finance Minister and their commitment to fiscal prudence, I think you might well find a nice surprise in the budget.
So essentially you're saying that we might see them sticking to the path of fiscal consolidation. Okay. I mean, the other aspect is that why, you said it's not a bad idea, why?
No, because personally, I want to focus much more on revenue deficit than on fiscal deficit. I think it's very bad idea to borrow and consume, but it's not at all a bad idea to borrow and improve your productivity and improve your capacities and supply side response. Nobody objects to my borrowing funds for buying a motorcycle, which brings me office much better. So that the same thing holds for the countries as a whole, and also that the focus should be much more on debt servicing rather than the actual size of the debt. So that you should be managing your debt much better than to simply keep talking about a very crude, in some sense, a very broad, crude concept of what's the external debt to GDP ratio. I think it's debt servicing which is important, and it is revenue deficit which is important, and not the size of the fiscal deficit.
But for a country that's, I mean, that needs a lot of foreign capital, a lot of investors look at how and where the fiscal deficit is. And also a lot of rating agencies look at it, and it sort of creates the mood or setting for how a foreign investor looks at a country.
I don't think so. Also simply because foreign investment flows finance, I think, no more than 3% of our total investment. So it is a typical case of tail wagging the dog. So I don't think that should be allowed. And I think the rating agencies also, if you look at what they used to do with China 15 years ago, and Chinese fiscal deficits were quite high and their banks were not so well served, they are always looking, they are wise people, they look at the growth prospects, they look at your growth potential rather than just be a fiscal fundamentalist and so on. So I think there is something not right with people continuing to focus only on this one number and not on the others. And I therefore urge you and everybody else to sort of look at what India's growth prospects are, rather than to look at only whether or not the fiscal deficit target, which I think is anyway arbitrarily chosen. What is the sanctity for 3%? Nobody has yet explained it to me. So to that extent, I think, to repeat myself, I would be much more concerned with the revenue deficit and with my debt servicing costs rather than fiscal deficit.
While Indian bonds extended their decline post the economic survey, equity markets continue to hold on to gains after hitting fresh record highs once again. Neeraj Shah standing by to take us through all the action on the Dalal Street today. Neeraj, while the benchmark indices continue to climb, the small cap and the mid cap indices took a significant beating today.
Well, it wasn't really looking to be a great day of trade if you look at the broader end of the spectrum, to be honest. So while the large caps did okay, Nifty Sensex, Nifty Bank didn't do as well, and the mid cap and the small cap end of the market did come off. That's the Nifty Bank, which was just about holding out. And look at the mid caps and the small caps down about 1%. So all was not hunky-dory, to be honest, especially in the market breadth front. Let's take a look at some of the large caps first, though, and start off with what was really happening to the HDFC twins. They held fort, and which is why the markets were doing what they were doing. Predominantly these two names, 3% higher for HDFC, 1% higher for HDFC Bank. Tech Mahindra, ahead of the numbers, went up about 1% as well, and that stock will react in the session tomorrow. The numbers came out post-market hours, but it was Pharma that was showing mixed trends. Sun Pharma up 1.5%, Lupin down about 4%, Dr. Reddy's was down, Glenmark was down, so a clutch of those pharma names looked slightly wobbly in the session. Select mid-cap IT gains, so Emphasis up 6.5%, L&T Infotech about 4.5%. Not everything did well, but select mid-cap IT stocks did have a fairly decent outing. But momentum came off. So JP Associates, IFCI, GVK, clutch of these names were down 6, 7, 8%. And mind you, the broader end of the spectrum, even quality suffered a bit. So if you look at what, for example, Graph Finances did, it's down 7%. But from the recent highs, the stock has corrected about 19%. So there's a bit of pressure that's coming up on Graph Finance as well. Last but not the least, stocks like KSB Pumps and Shakti Pumps, good results for this one. They won a large order. They did reasonably well. The volumes on Shakti Pumps, close to 2 million shares, told a story.
Thanks for bringing us those details, Neeraj. He was talking about HDFC Limited, and that one stock alone contributed to as much as 25 points to the 60-point rally that we saw on the Nifty today. This, of course, on the back of earnings after HDFC reported a threefold jump in its quarterly earnings. The mortgage lender reported a 233% rise in its third quarter profit, and that was mainly on account of a one-time gain that it received by selling part of its stake in HDFC Standard Life Insurance during its IPO in the third quarter. Net interest income rose by 9.6% on a year-on-year basis, while gross NPAs remained unchanged at 1.15%. The loan growth came in at 19.3%, a trend that was faster than the average run rate of 16-17% that we have seen in the past few quarters. Growth in the individual loan books also came in at about 19% versus an average of 15% that we have seen over the past few quarters. So beat coming in there, but the management also focused on the NPA numbers. In fact, the NPA number for HDFC remained nearly unchanged, and that's the word coming from HDFC CEO Keki Mistry. Listen in.
SR Steel, we have an exposure which has been provided for. We would now carry a 50% provisioning in respect of SR Steel. JP, we have some exposure, but JP, our loan is being serviced regularly because it's a housing project.
Staying with corporate earnings, LIC Housing Finance reported a 1.7% drop in its third quarter profit, coming in below street estimates. Now, the company reported a bottom line of 491 crores versus 499 crores in the similar period last year. Now, on the asset quality front, the company reported a slight uptick on the net NPA. To discuss more about the company's performance, we're being joined by Vinay Shah, the MD and CEO of LIC Housing Finance. Thank you for joining us, sir. Just wanted to understand that your margins are at a multi-quarter low despite the rising proportion of the non-core portfolio. So how much of it can actually be attributed to, one, the higher dependence that LIC has on market borrowings, and second, towards competitive pressures?
Well, yeah, I agree that the interest margins have been low. The spread also has been low. We have in fact reduced our borrowings cost by 5 basis points as compared to Q2. The lending rates, as you also know, are probably at one of the lowest. I would also assign the fall in margins to our low share in project loans. which continue to be at around a share of 4% as far as the loan book is concerned.
So if you could also throw some light on the competitive pressures in the housing finance space and the kind of traction that you're seeing in affordable housing.
Affordable, if I can tell you, only for Q3 we had a share of about 8% of the individual loan portfolio. The outlook as far as disbursements are concerned, in fact Q3 has been one of our better quarters as far as individual loan disbursements go, showing a growth rate of about 32% in the individual loan segment. Going further also, we see that the sanctions, because the sanctions growth rates are also at very good levels. So going into Q4 as well ahead in year 2019, we have a very good outlook.
Right, so but the individual home loan growth remains sluggish despite the uptick that we've seen in the disbursements. Is this largely because of higher prepayments, and can this trend continue?
Yeah, see the portfolio growth rate, we had targeted around 14-15%. So it continues to be around that level. We are maintaining a growth rate of 15%. But yeah, it is not commensurate to the disbursement. It happens every year. Both the growth rates don't tally, and there have been prepayments. There are natural exits also. So those things do take place. If I can tell you, current year we have exit of around 19,000 crores up to December 2017.
So, but as many as 83% of your customers are salaried, and yet the individual NPAs are steadily climbing up. What would explain that?
Our overall book, if you see, the salaried class would constitutes around 70%. Now, it's around 70%. That's number one. Number two, the NPAs levels, as you are saying, is they have remained flattish as compared to Q2 as far as the retail segment is concerned. Project, of course, there was hike, but there also is not contributed to any big project going into default.
The government has already taken a few steps to push affordable housing, but do you believe there is any area that still needs to be addressed, and if there's anything that you expect to be announced in the budget?
As it is, the parameters that the government had announced initially and whatever subsequent changes they have done, it has become quite attractive. The subsidy part remains as it is. I don't see any further more relaxation in the budget. They have also relaxed the area, the flat area part of it. So that way, but maybe they may think upon increasing the subsidy part percentage, if at all. That's the only plus that can be expected from the budget.
Thank you for joining us here on Bloomberg Quints, and wish you all the very best for the quarters going ahead. So that was the management of LIC Housing Finance on the back of earnings. The stock, however, took a beating of about 1.5%. But moving on to national stories, Prime Minister Narendra Modi today made a fresh pitch for early passage of the bill to criminalize the practice of instant triple talaq. Modi also requested political parties to pass it in the budget session. Now, in his customary media address outside Parliament House building on the first day of the budget session, Modi called upon the members of both ruling and opposition parties to not politicize important issues like triple talaq. Delivering his maiden address to the joint sitting of both houses of Parliament today, President Ramnath Kovind also expressed confidence that the bill to ban instant triple talaq will soon become a law.
मैं आशा करता हूं और मैं देश के सभी राजनीतिक दलों को विनम्र आग्रह करता हूं कि इस सत्र में 3 तलाक महिलाओं के, विशेष करके मुस्लिम महिलाओं के हक की रक्षा करने वाले इस निर्णय को हम सब पारित करें और 2018 के नए वर्ष की एक उत्तम भेंट सौगात हमारी मुस्लिम महिलाओं को हम दें।
Well, with that, it's a wrap on the show. I hope we helped you catch up all that you missed through the day. Thanks for watching and stay tuned to Bloomberg Quint Live.